everybody, Buffy the Rate Slayer here, and we are back with our June weekly market insight series, which is coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. Financial markets experienced a period of positive performance in the beginning of the week. However, as the week progressed, the markets were unable to maintain a favorable momentum. The initial optimism that characterized the Juneteenth period gradually decreased, giving way to a more challenging and volatile environment. Economic indicators, including projection on inflation, employment, and Fed Chair Powell, influenced investor confidence. Geopolitical developments, such as trade tensions in key regions, introduced additional uncertainties that weighed on market sentiment. Powell appeared on Capitol Hill this week for his semi-annual monetary policy testimony. He testified before the House of Panel on Wednesday and Thursday. Powell said policymakers expect interest rates will need to move higher to reduce price pressures, with the timing of additional increases based on incoming data. Stocks gave up, with the S&P 500 and Dow Jones Industrial Average flipping into negative territory for the week after Federal Reserve Chairman Jerome Powell said the central bank was monitoring the growing pressure on the commercial real estate sector. Federal Reserve Chair Jerome Powell said returning U.S. inflation to 2% is crucial to support the long-term health of the U.S. economy, and that more interest rate increases may be needed this year. Policymakers feel it will be appropriate to raise rates again this year, and perhaps twice if the economy perform about as expected, even as they've been hiked to an appropriately restrictive level. Meanwhile, West Texas Intermediate is trading at $69 a barrel. U.S. unemployment benefit applications were unchanged last week, suggesting the labor market remains resilient. Initial jobless claims held at 264,000 in the week ending June 17th, after a slight upward revision to the previous week's figures. Continuing claims, which include those who have received unemployment benefits for more than 1 week, fell to 1.76 million in the week of June 10th. The Bank of England decided to raise rates by 50 basis points this Thursday. Now, here's the update on the housing market. U.S. housing starts unexpectedly surged in May to a more than 1-year high, suggesting residential construction is improving. Beginning home construction jumped 21.7%. Single-family home building rose 18.5%, while starts of apartment buildings and other multifamily projects also increased. Applications to build climbed 5.2% to an annualized rate. Sales of previously owned U.S. homes barely rose in May as high mortgage rates continued to discourage owners from listing their properties. Contract closings edged up 0.2% to a 4.3 million annualized pace. Compared with a year earlier, sales were down more than 18% on an unadjusted basis. The Mortgage Bankers Association Index of applications for home purchases rose 1.5% in the week ending June 16th to 165.6. The overall measure of mortgage applications, which includes those for both purchases and refinances, edged up to 0.5%. The MBA's refinancing index dropped for the 5th time in the last 6 weeks. So yes, that's all we have for the week, guys. Please join me again next week. Of course, I appreciate you for supporting our channel. And as usual, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a fantastic weekend, everybody. Buffy out.